As I told to you, this particular event, we are going to discuss two subjects. One is the option strategy, what we are going to initiate in this November 2020. Second is the pair trade, which we are going to initiate in this November 2020. Why this November 2020 is so important? Because in the first week of November 2020, you have Bihar state election as well as USA election. So these two are the major political events which is going to trigger now. So due to this political event, you will be having the volatility in the market and some extreme volatility situation also we can experience in this particular time. So how we can take benefit of this particular moment, that I am going to discuss. So I'll be demonstrating this particular my option strategy and pair trade with the help of our smart finance software, and some of the conceptual things I'll be taking also. So now, first I'll be taking one very simple conceptual understanding. When there is a more volatility, when there is more volatility we expect, that means a huge price fluctuation will result in the instrument. So I have taken the Nifty and Bank Nifty, both the pricings, and this particular Nifty and Bank Nifty pricings I have taken for the 5 calendar years study, means from 2015 to 2015 to 2020. So 5 calendar years, not the actual terms or the date wise year, January 2015 or 2015 to till date. So I have taken these all prices of Nifty as well as the Bank Nifty. So these two values I have taken. Why I have taken? I am just going to derive one pair trade decision out of that. So for that I require the calculation of beta. So calculation of beta is required. So this we are discussing during the November 2020 volatility. November 2020 volatility, how we will be benefited from that volatility. How we will take benefit from this volatility. So for that reason, I am just calculating the beta of Nifty and Bank Nifty for the past 5 years period. Past 5 calendar years means 2015 to 2020. So every day, what is the closing price of Nifty spot? What is the closing price of Bank Nifty spot? I have taken, and I have taken their percentage of changes, and I'm using one Excel formula called slope. So slope of this Bank Nifty percentage of changes, comma the Nifty percentage of changes. So this slope gives me 1.22. The slope is nothing but the beta of Nifty and Bank Nifty. So this is the beta of the Nifty and Bank Nifty the past 5 calendar years. And the same way, if I just calculate the beta of the past 5 days, by past 10 days, it is telling me 1.8. That means the price change which we can expect in the Bank Nifty with respect to the Nifty. So that is what I have just documented here. So this 1.22 means if Nifty changes by 1%, you will expect 1.22% change in the Bank Nifty, which is being told by its past 5 calendar years data. So using this, we are going to take some decisions, trade decisions based on this. So for that, I'm just telling that 28th October, maybe today's value will be different. 29th and 30th October, Nifty value is different, Bank Nifty value is different. So you have to change that value. So I'm just taking one uniform 5% value of Nifty, means 5% value of Nifty comes to 586 points. 5% value of the Bank Nifty comes to 1211 points. So what I'm doing here, I got the information from its beta. Each 1% change in the Nifty will bring 1.22% change in the Bank Nifty. Means if Nifty during this volatility situation, if Nifty is going up by 5%, then I will be expecting 5 into 5 into 5 into 1.22 minimum, means 6% in the back Nifty, or from the past 10 days data what information I am getting, so from there it is 9%. That means every 5% change in the Nifty, percent change in the Nifty will invite 6 to 9% changes in the Bank Nifty. That is the conclusion I have derived. So that is the conclusion I have derived. Every 5% change in the Nifty will bring 6 to 9% change in the Bank Nifty. If Nifty moves up by 5%, then you can expect 6 to 9% up move in the Bank Nifty. If Nifty fall by 5%, then we'll be expecting 6 to 9% fall in the Bank Nifty. That is what we got. So now from both the Nifty and Bank Nifty price, I am just taking 5% values, which comes to 586 points in the Nifty, and Bank Nifty is having 1200 points. So here this beta value also again represents Bank Nifty is more volatile, more reactive, more value additions as compared to the Nifty. This beta of 1.22 suggests that 1.22 to 1.80. So what I'm going to do, the instrument which is having a higher beta or a higher value, that instrument I am going to buy. The instrument which is having the lower beta, I am going to sell. Means my Nifty will be in the selling component and Bank Nifty will be the buying component. So to counter this volatility, during this period of volatility, what will be expected? The Nifty and Bank Nifty will have a price deviation of 0.2 to 0.8%. Means every 1% change in the Nifty can invite 1.2 to 1.8% changes in the Bank Nifty. So the higher volatility instrument I am buying, lower volatility instrument I am selling. Now I have to hedge it, because simple buying and selling is not going to solve my purpose, because November 2020 I am going to experience a extreme volatility. So I have to hedge it with one deep in the money call option and put option. So my next step is to hedge this both the trades with respect to deep in the money call option and put option. So I am the buyer in the Bank Nifty. So I have to hedge it with one put option, and I am the seller in the Nifty. Seller in the Nifty, I have to hedge it with one call option. Means I have to buy a call option and I have to buy a put option, and both should be deep in the money. So so I need to decide a strike for that. So what I did here, I have just taken 5% value of Nifty and Bank Nifty. I have added this 1200 points to Bank Nifty. I have subtracted this 586 points from the Nifty. So this suggests me I'll be hedging the Nifty with 11,150 call option and sell the future. So 11,000 here, call option strike will be 11,150. So I'll be selling Nifty along with 11,150 call option buy. I'll be buying the Bank Nifty along with 25,500 put option. So this is the simplest trade I can take. So put option 25,500 put option. So this is the simplest trade I can take to benefit from this November election related volatility. Since it is both are deep in the money, it will be having the lesser time value, and post this election related outcomes, if there is a price oscillation happens as per the beta relationship, so I can get one extra leverage movement in the Bank Nifty as well as in the Nifty. So this extra leverage movement is going to reward me in my trade. So this is what I am going to initiate. This will be my first or the pair trade plan for to deal with this kind of extreme volatility. So this is my pair trade plan to deal with the extreme volatility. Again, I will repeat what will be my trade for this November or to deal with this November volatility. I'll be buying the Bank Nifty along with 25,500 put option. I'll be selling Nifty along with 11,150 call option buy. So both the options I am purchasing, and Nifty future I am selling, Bank Nifty future I am buying. Why I am doing so? I have seen the beta relationship. So every 1% change in the Nifty will bring 1.2% to 1.8% changes in the Bank Nifty. That is based on its past 5 years, 5 calendar years data, as well as from the past 10 days data relationship. So these are the deep in the money options you need to buy along with the future. So this is what the simplest trade which you can enter to deal with this volatility. Then again, I'll be going to the second part of my things. Again, some other process also you can able to do pair trade using the Z score. So how to do the pair trade using the Z score? You will find out lot of videos in our website. We have a fantastic software here. So Z score says that here +2 by dependent, -2 by independent. So which is independent and which is dependent? We have compared all Nifty future stocks with Nifty. All Nifty future stocks with Nifty means Nifty is independent, and all stocks are dependent, including Bank Nifty. So here Z score values you are getting. So as per this method, whichever the stocks are having the Z score as +2, +2 need to be bought and Nifty to be sold along with that. Whichever the stocks are having -2, so there those stocks should be sold and Nifty should be bought in place of that. For example, you can say that here, so we are having Z score, if I can just go through this, -2. So here you are getting Tech Mahindra -2 as the Z score. You are getting here Jindal Steel 1 point -2, near to -2 here. So similar way, you can say that 1.78 here, 1.78 also SBI case you are getting. So all this Z score, wherever the Z score is -2, that time the independent means Nifty to be bought and the counter trade should be, the stock should be sold. So this process also you can follow for the pair trade. So two processes I have told you. So whichever the, and both the processes try to hedge with the in the money options. So here idea will be, when there is a extreme volatility, there will be a extreme movement in the price and you need to take benefit of that. So this is the first process of initiating the pair trade to deal with this kind of extreme volatile situation. Second one, the option strategy. Many of you will be dealing with the option strategy. So this option strategy, whenever you initiate, there are two strategies which can be beneficial at this point of time. One is short box spread in call and put options along with a short strangle. So this is a strategy you can able to, so you can able to take for this. So here the strategy which I will be recommending in this kind of situation will be short box spread along with the short strangle in the near month options or volatility turning point. Second is wide wing butterfly strategy in the Nifty call and put option. So this volatility turning point, what I am suggesting that how you will know that volatility turning point. So to know this particular month, what is the movement you can expect in the index. So I am just demonstrating with our option strategy software. So here November data I am just loading here. Something I will just simulate so that some strategies I can simulate. So say I am just buying a future along with that something so that I can get those monthly simulations data. So here I'll be just simulating it with the 11,900 put. Suppose I am buying one lot. So say 5 days I am holding, calculate this back. So here one advanced price trend analyzer we have given. So many of you, those who are having this particular software, you will be getting this. So here we have given you monthly uptrend and monthly downtrend, and here also weekly uptrend, weekly downtrend is there. So this says that this particular month of November you have a movement, expected movement you can get 11,000, 12,200 to 11,108. So this is the expected movement you can get in this month of November 2020. So your volatility turning point will be 12,200 to 11,100. So I was mentioning about volatility turning point. So these 2 points have the volatility turning point, 11,100 and 12,200. So this is being calculated using a simulated method. So if you own the software, you can able to find out. For all stocks, you can get that. So here I'm getting 11,100 to 12,200. So this is my movement, possible movement, 1,100 points gap in between them. So this is what I have written here. Nifty volatility turning points will be 12,200 to 11,100. There is some 8 to 10 points here, 197 here, 108. So this is the only 5 to 7 points of difference is there. So what strategy we have to initiate? Short box spread in call can be formed by purchasing 11,000 call options and selling 10,000 call options. So short box spread is being initiated with 911 rupees spread, means you got a credit, 10,000 call option you are selling. So today's price I have entered here, 11,000 call option you are buying. So 911 points of spread means how much you will be losing here. So 89 points of loss risk is there. So total, if this trade goes wrong and Nifty never fall below 11,000, then 89 points you are going to lose. But if Nifty fall to 10,000, then you are going to earn 900 rupees. So that is also a fact. Same way, if I am going for the put options, 12,000 put options I am buying and 13,000 put options I am selling. So here the question comes, why I choose this particular strikes? The reason is my turning points are coming to 11,100 and 12,200. With the view of that, so I am just forming some deep in the money, so that spread should be maximum. And if the price penetrates to the level of 11,100 or 12,200, so this spread is going to benefit. So here too also spread comes to 158, means you are selling 13,000 put, buying 12,000 put. So short box spread in call and put option. So here how much your loss risk? So 8 twos are 10 and here 5 are 6. So here 42 and here 1. So 142 points of loss risk is there. So 142 points of loss risk here and here 89 points of loss risk. So totally if you can add it here, so 9 twos are 11 and 8 and 9 for 3 and 2. 231 point of loss risk you have in this box spread. If you sit idle, then by the end of month, this 231 rupees loss you have to bear. If you do not do anything, this 231 points of loss risk is there. If you just initiate this trade and don't do anything, then 231 point you are going to lose. That is also there. So now what we need to do? We need to manage this 231. So how we are going to manage? One short strangle in the near month means we are going to sell 12,500 call and 10,500 put of the December month, which is almost above 90, means here call trades at 92 and put trades at 96. So near to 186 to 190 rupees premium we need to get it from this. So very idea of initiating this particular trade is this 231 points risk we are not going to give, but if there is a wide movement happens, say a price movement happen above 12,200 or there is a price movement happen below 11,100, in that case we'll make a decent profit, good profit. But since these two strategies are being spread out in two different months, you are initiating a short strangle in December series and box spread in the November series. Theoretically, you can't able to estimate whatever the profit or estimate the theoretically you can't estimate the losses because these two strategies are happening in two different months. So that is the reason of this hybrid strategy cannot give you any theoretical estimation of the profit and loss, and you are not going to hold this strategy till the end of November. So your holding period will be 10th November plus. So 10th November plus by 11th November you need to come out of this strategy and book the profit in between. If that is price move happen to 10,500 to 12,500, you need to book the profit or loss and come out. So in this points you will have a maximum profit 10,500 to 12,500 level, you will have a maximum profit. However, start booking the profit once the price moves above 12,000. Start booking the profit once the price fall below 11,100 or at 11,100. So that point of time you start booking the profit. So small amount of profit will be there, but start booking the profit, and this will be a good strategy during this volatility time. Once this event is over, the time decay in options will happen. Normally this two short strangles what you are initiating, it will have a great time decay, and this spread also will be still there. It will be 100% of 231 points, you will not lose. So that spread will be still there because till the end of month this spread need to be balanced. So here the time decay in these options will be more and the spread decay will be less, and there, so in a rough estimate you can have a 100 to 125 points of gain in case it consolidate between 11,000 to 12,200. Consolidate between 11,000 to 12,200, you will be having a conservative profit estimate of 100 to 125 points, and theoretically you can't able to estimate. And in case there is a wide move and the VIX increases, then you will have of liability of 40 to 30 to 40 points. So 30 to 40 points when I say, so multiply it with the 75. So 2,800 to 3,000 rupees loss risk, 7,000 to 7,500 as your profitability you can get in this trade, and this will be also very low margin trade, around 80,000 margin this particular trade will consume. So this is one strategy you can initiate. Second strategy what I am suggesting here, wide wing butterfly strategy in the Nifty call and put both. So when we say about wide wing butterfly strategy, what you need to do, Nifty is at 11,600 level. So what you have to do here, 11,600 call option sell one lot, buy 11,800 call two lots, and 12,200 call you sell one lot. So the spread between your buy and sell is 200 points here. However, from 11,800 to 12,200, it is a 400 point spread. So that makes it a wide wing call butterfly. Same way put butterfly also you can form. 11,600 put you can sell, 11,400 put two lots you can buy, 11,000 put option one lot you can sell. So this particular strategy if you initiate, these two also having a great profitability. If it is coming to 12,200 level or 11,000 level. In the both the cases, your profitability will be 9,500 to 11,000. You can get it. In case it consolidates between post the results, if it consolidate between 11,600 to 800 or 11,600 to 400, your liability will be capped 2,000 to 3,000 level. So this is the level it can cap it. So you can estimate that same strategies performance in our software also. So like I have told you, so here there is a reset button, you can reset it. So both the combinations independently you have to do. So 11,400 put options, we are buying 2 lots and we are selling put option of 11,600. This we are selling 1 lot. Along with that, one 11,000 put option also we are selling. So we are selling 1 lot. So see the great premiums are sitting here. So 408, 280 plus 100, 380 we are getting. So put side, if I can calculate, it is telling that at 12,200 level, 2,000 rupees loss will be there. In fact, if it is coming to 11,000 level, there will be a 4,000 rupees profit will be here. So profit will be 4,000 level will be here. So same process you can follow for the call side. So if you just go for the call options and give this same process, call options, sell 1 lot. And if you can go for the call options here, 11,800 call options, buy 2 lots. And along with that, if you can go with the call options of 12,200 and sell 1 lot. So here two also, if you calculate, I have given the 5 days time, so you can give more time. So around 12,200 level. So this was a 5 to 6,000, 12,200 also you can put it here. So at 12,200 level, 6,000 rupees profit will be here. So you can reduce 2,000. That time it's a 5 days period I have given. So if you just give a 10 days period, the things will be different. So you will be getting a great profit here. So this is here. Tomorrow it's a Monday itself you can initiate this trade. So this is the two strategies you can initiate. Wide wing butterfly, which is a low risk, low profit strategy, or you can form box spread strategy, because post these political events there will be a great decay in the IV with a huge price oscillation. So you have to prepare for that. So this is one type of trade. Second type of trade, what I have told to you, that along with your beta, so you have to buy the bank nifty, sell the nifty, each 1 lot. Bank nifty should be hedged with 25,500 put option, deep in the money option, and nifty should be hedged with 11,150 call option. So this two trades you can initiate along with the future or along with the option based on your margin availability. You can initiate. So that pair trade also requires 80 to 85,000 margin, and along with that you need to keep some 10 to 20,000 rupees as a M2M requirement. M2M requirement. So 10 to 20,000 rupees you have to keep as a M2M requirement. And both this option strategy also require the similar kind of capital. So less than 1 lakh you can initiate any of this strategy. Any query, ask me. So we are having a specific offer now. All our softwares. This is the all our softwares without our course materials. You can get it as 9,000 plus GST, 10,620. So what are the softwares will be covered in that? You can get it in the product link. So all these 6 products will be covered here. So, and if you want to take along with all courses, then that also we are having a discount. So along with the GST, 16,040. And this along with the GST, it will cost you 10,620. So we have an offer, and this is till Diwali, this offer is there. So if you wish to procure any of our product, you can procure at this Dasara and Diwali offer price. So Sanjay ji has told, after I initiate this Nifty and Bank Nifty pair trade, means I am buying Bank Nifty, selling Nifty, and hedging also with respect to the deep in the money call option and put option. After I initiate, if Bank Nifty constantly falling down and Nifty constantly goes up, why this will not happen, that I am validating. So what is correlation? Correlation 93% says that in past N data, N is standing for 5 to 10 years data. 94% of time, Bank Nifty and Nifty move in the same direction. Only 6% of time there is a deviation. If 100 trading days you can take, 94 days they will move in the same direction. One is going up means other will go up. Only there will be a deviation in the 6 days. That is what correlation says. So correlation says that means you must have that kind of belief on that. So if there is a correlation is negative, they have never gone to the correlation negative. That is also another fact. So 30% of the banking stocks are there in the Nifty index. That also is a factor. Nifty is having a 30% of stocks in the Nifty 50 index belongs to the bank stocks. So that is quite impractical to think Bank Nifty will fall like a leaf, and same time the Nifty will be rising like a hero. So that is impractical. So but it is purely when there is a election related uncertainty is there, I should be neutral. Number two, the trade should have a greater probability of win. Number three, the third thing should be very, very important. All my trades must be hedged with limited time value risk. With limited time value risk. So that should be my criteria. So with this criteria only, I have suggested you these three trades. Then remaining trades is purely based on your experience, expertise, whichever combination you want to do, you can do it based on your, and all these three trades what I have recommended, all will be having less than 85,000 margin. So only the future trade I have recommended some 20,000 rupees plus M2M need you need to keep with you, because you have a hedge trade. Post the reaction happens, you need to till profit point you need to wait. So for that reason only you require some money to for your M2M. For Jet software, Reliance also we have taken Surajji. Here we are finding out 54% correlation. Means Nifty and Reliance will be having only 54% correlation. Jet score is only 0.2. So that is what our calculation says. So rest depend upon how the Reliance acts and reacts. So Reliance is not everything in the Nifty. If you are happy with your combinations, whatever you are made for this month of November to deal, you can take those combinations. I have no say on that. The combinations which will be best suitable for this month of November political volatility. So this I have explained. Two option strategies will be best suitable at this point of time, and one simple mathematical pair trade technique will be highly useful in this particular time. So these two things I have just explained it. Do see this recording. Whenever the recording will be shared, please visit this recording, share the recording with your friends, and do initiate this trade. Even though if you are not initiating the trade, at least do some paper trade and track the trade till 10th of November and give your feedback. Thank you very much. Thank you for your time.